Micron reported quarterly financial results after the markets closed on Wednesday, December 18th, 2024. Those results sent the stock price crashing almost 20% as investors did not like what they saw from Micron Technology. Of course, I'm disappointed in that because I had Micron Technology stock rated as one of my top stocks to buy. And I even said before the earnings release that the stock price was so undervalued that it made sense to buy shares before the earnings came out. So these numbers are a real disappointment for me. Nevertheless, I'm going to review these latest financial figures, compare them with the now even lower valuation to answer the question if I think Micron stock is a buy here on this dip, or if the results were so disappointing that investors should now not be buying the stock. So I'll review the figures, highlight what is sending the stock price crashing precisely, and then update my buy recommendation for Micron stock. Let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, in one bright spot for the company, they did say that data center revenue grew by over 40% from the previous quarter, and it's up over 400% year over year. That increase was so large that now data center revenue makes up for over 50% of the company's business. This makes it a more attractive business to own because the data center segment is expected to grow much faster over the next 5 to 10 years than the company's consumer-oriented segments, which include personal computers, tablets, smartphones, etc. The data center segment is the one that's benefiting the most from the rising effectiveness of artificial intelligence. This is the segment that NVIDIA is benefiting from most significantly. So Micron saying that it delivered a record quarter and their data center revenue surpassed 50% of the revenue for the first time. So far, so good. This isn't what sent the stock price crashing. This investors liked. But what investors didn't like was the next statement. Consumer-oriented markets are weaker in the near term, and we anticipate a return to growth in the second half of our fiscal year. Second half of our fiscal year, meaning the next quarter, the second quarter, is not going to be good. And we see that in the company's forecast for Q2, which I will share with you, which was the big disappointment coming out of the company's quarterly earnings release. These are the smartphone and personal computer markets primarily, and Micron Technology noting that those segments were slower to recover than initially expected. Market participants, including myself, have been waiting for a recovery in the personal computer market, and that's been much slower than anticipated. And companies like Micron, Intel, and others have experienced slower than expected recoveries as a result of that market not being as robust at this point as we were expecting. 2022 and 2023 were horrible years for the personal computer market because so many people bought computers in 2020 and 2021 when the work from home trend, the learn from home trend, and the everything from home trend was at full steam. And so if you bought a computer in those years, you're not going to need one in 22 and 23. The same was true, although not as extremely for smartphones, because people bought a lot of smartphones in 2020 and 2021 as well, because they had more money to spend and fewer places to spend that money. One of the areas that benefited was smartphones. And so there was a gap, a bit of a vacuum in 22 and 23, which was expected to recover in 2024, at least mid 2024, because those electronics that were purchased in 2020 and 2021 are now getting relatively old, and people want the newer technology. And so the market was anticipating a recovery in those segments, which didn't materialize. It didn't happen in 2024. And so now we're looking ahead, and Micron is saying it's not even going to happen in its next quarter. It's going to happen further down the line in its fiscal year 2025. So that's what really disappointed market participants, as well as one other item I will share with you in a little bit. So the actual results, revenue and margins and earnings were great, right? Revenue jumped to 8.7 billion, up from 4.7 billion. Operating margin improved to 25% from negative 24%. Earnings per share jumped to $1.67 from negative $1.12. So the year over year improvements were massive for Micron in this quarter. One other item that concerned investors, I don't want to say disappointed, but concerned, is the growing capital expenditures. Investments in capital expenditures in the most recent quarter were $3.13 billion, which resulted in adjusted free cash flow of just $112 million. So Micron is being compared to Intel right now, which is the other semiconductor design plus manufacturing company. There's relatively few design plus manufacturing companies in the semiconductor industry. Most companies are doing one or the other. Micron and Intel are doing both. And Intel, of course, you've seen the troubles at Intel, stock price down, cash flows down, capital expenditures soaring, and investors are concerned that Micron is heading in that direction because, as I noted, they're forecasting slower growth in the upcoming quarter, while at the same time they increased their capital expenditures in the first quarter. 3 billion divided by 8.7 billion, that's a greater than 33% of capex to sales ratio. That's a really high ratio. And so investors are concerned about that, while at the same time the company is giving a below expected forecast. Management said they expect revenue of $7.9 billion for their second quarter of 2025. The analysts on Wall Street were expecting Micron to deliver a forecast closer to $8.9 billion. The number $7.9 billion is $800 million below what they generated in the first quarter. So they're expecting a sequential slowdown, which the market was not anticipating. The market was anticipating a sequential increase actually for Micron's results. So this was an abrupt shock, and you can understand why the stock price fell as much as it fell following these results. So all that being said, Micron Technology stock is now trading at a forward price to earnings of just 6.7, which I think is a really cheap valuation. Now, these results were disappointing to be sure. However, the stock price adjusted downward already over 15%, and so now you're getting this business at a much lower price to account for those disappointing metrics that it reported. So to answer the question, do I think Micron is still a buy following these results? The answer is yes. I still like Micron. I still think it's one of the top 25 stocks to buy right now, although I like it a little bit less following these earnings results. I like it a little bit less because of the disappointment in the company's forecast and in the slower recovery in the consumer-oriented markets. But I do like that the data center business is absolutely thriving. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.